The EU Commission today decided that it will extend equivalence to Switzerland for 6 months, pending discussions on a framework agreement. Here to tell us more about what this could mean is Thomas Kindler from SIX. Thomas, hi, thanks for joining us. So, extension of equivalence for 6 months. What does that imply for Switzerland as a whole?
I mean, first of all, it's the outcome we have always envisaged. We've always said extension of equivalence is the optimal result that can be achieved in the process, so that's positive. Certainly we had hoped for a longer period than 6 months, but it's a first step. It will give time in the political process between the EU and Switzerland to further negotiate on the framework agreement, which is a prerequisite for exchange equivalence.
Okay, but the Swiss federal government announced a few weeks ago that it would kick off the entire contingency plan and be ready. What does this decision now imply for that?
Yeah, that's correct. End of November, the Federal Council decided and communicated a so-called contingency measure, not knowing the outcome of the equivalence decision in order to provide security and transparency to the markets. This contingency measure entails that going forward, Swiss shares can only be traded on Swiss trading venues or approved foreign trading venues approved by FINMA. And a prerequisite for the approval is that the foreign jurisdictions of the trading venues consider Switzerland as equivalent. So without the decision we have learned about today of the further extension, the EU trading venues would have been on a FINMA list, basically not being approved to offer trading in Swiss shares.
So what you're basically saying is, so this means that the contingency measures by the federal government will basically be put on hold pending the framework discussions that go on over the next 6 months. So it's a political discussion that needs to be taken.
Yes, absolutely. I mean, it has become very clear in the process. Mm-hmm. It's not about technicalities. It's a purely political discussion. Mm-hmm. What's going to happen to the contingency measure is it will be suspended for 6 months. Basically, the FINMA list I mentioned earlier will be blank. So no foreign trading venue will be prohibited from offering trading in Swiss securities. And then it will depend on the outcome after the 6 month extension period. Will there be another extension or not? And then the contingency measure could, if needed, could be activated again.
So if that scenario were to materialize, what would that mean for Switzerland as a whole, as a market?
Yeah, I mean, as I said before, the contingency measure would be reactivated. Basically, all EU trading venues would be on the FINMA list as being not approved to offer trading in Swiss shares. Ultimately, the trading volume in Swiss shares would be concentrated on SIX. We would see almost 100% of the market share on our exchange. So in the short term, I think the Swiss financial market and as a consequence, our own business would be protected.
That's the short-term perspective. But would you care to hazard an opinion on what the long-term implication for Switzerland could be of equivalence not being accorded in this context?
Yeah. To be honest, it's very hard to tell. It will depend on the behavior of European investors, how much flow will shift from on-exchange to OTC, for example, how that will impact Swiss issuers, in particular the large ones. In the short term, we are very confident that the contingency measure, if effective, and there are no indications it won't be effective, will serve the purpose and provide safety, security, integrity for the Swiss financial market and ultimately for our business. in the long term, certain behaviors need to be closely monitored.
But this year, when the EU announced that it was not according not recognition, but equivalence for the country, how did issuers behave this year? What was the response for the exchange?
Yeah, I mean, this year, in terms of IPOs and listings, it has been the best year since the financial crisis. We have seen 11 listings, the last one early December, and all that happened fully knowing the issues around equivalence, and clearly that hasn't shied away any issuers.
Great, well, let's hope that sets the scene for the future then. Thomas, thanks for joining us.
Pleasure, Howie.